Good morning, friends. Welcome back to the 40th episode of State of the Market Live. Today is 29th July 2022, and it's a sunny Friday morning. The day seems to be very good. Even the markets are feeling the same because SGX Nifty is trading around 17,170, which is 100 points just above a key level on weekly charts, which is 17,273. I have mentioned it in my Telegram channel yesterday. First of all, thanks, guys. This is the 40th episode. I'm very happy that I have kept up my discipline, like in many things, which I am very good at. I am very good at repeatedly doing the same thing without getting bored, even if there is no incentive. That is the important point of discipline. We'll talk at the end of the video about trading discipline. In general, discipline is very important in life if you want to excel. In trading, it is far more important because we are dealing with risk. We are dealing with the demon called losses. So the only way you can control losses is by getting addicted to something called discipline. Okay. So we'll talk about this in today's video and many other coming videos. Let's get into the business of analyzing Nifty and Bank Nifty for today. So from today, we will be exclusively focusing only on market profile charts because that is where I can give more value. We'll discuss price action as well. Price action is equally important. Don't think that market profile is some kind of a secret sauce for you to make only profits. Not at all. If someone had a system that is a secret sauce, he would be richer forever, right? So it is not secret. So every system is only like a crutch. That means it helps you to walk in the thick forest of market. So never think that something is a secret sauce and you can only make money all the time. The only thing that makes money is controlling your losses. If you cannot control your losses, no system can help you. Even on a longer time frame or a shorter time frame or a micro time frame, whatever you take, controlling losses is paramount. Okay, so risk management is the real source of life, and so as in trading. Okay, without much ado, without much delay, let's get back into our business of getting prepared for the market. So we should spend every day like this, the way I'm doing, in understanding the market. Then only you should trade. Otherwise, do not come to the market at 9:15 without preparation. That is like, getting into the battleground without having your armor, without having your tools, and then suddenly you are in the midst of a battlefield. You're going to get killed. I don't want to talk such negative terms on a Friday, but that is the truth of markets, right? Okay, so first let's look at the price action, how the daily charts are shaping up. Why I still look at price action even as I follow market profile diligently. That is because in price action you will get a overall picture of the market. First, you need to always get that every day, day in and day out. You look at what the market is doing on a broader panel. Okay, so then only you should get into market profile, which gives you more information about how to tackle the intraday. Great. So on a daily time frame, we see that I was proved wrong, because on outside days I thought there will be a small bar. This is not a too big bar, a too wide range bar. However, it is not small as well as I expected yesterday. because of bank Nifty also had to travel around, kind of more than 100 points and close near 16,923. Okay, this is just 100 points above the breakout level that I mentioned in yesterday's video as well as in Telegram. I mentioned to you that 16,828 is the level that you need to keep in mind. So now when we go down, that is also the level which is going to bring trouble for longs. Okay, so today we have a good green bar. Yesterday we had a very good green bar, and then you see that we are above the swing high, or exactly. Okay, so the swing high is acting as a support now. So today we need to keep this in mind. That is the reason why I said 16,823, sorry, 16,828 is very, very important. Okay, now what are we going to do on the upside? Let's see if there are any Fibonacci's that are lying nearby, so that we can see if there is a decent resistance. So we see that yes, we are exactly at the resistance. That is the reason why the market stopped at 915. So this could be another important level that you need to take care of today. Even if we gap up in between 17,000 and 17,200 levels, you need to keep 915 on the radar. Very, very important. So remember that. So what are the key levels on the downside you have to remember? One is 915 and the second one is 828. So these are the levels which you need to keep in mind. Now, on the upside, what I see is we are going to get a decent resistance at this Duff bar. So probably at around 170 levels, 170, 180 levels, it is going to be a key resistance. If you look at SGX, it should be trading at around 177, and then we will have a good attraction between this 200 and 400. However, it is one step at a time. We are not bogged with positive news, so don't look for kind of a 300-point gap up or 400-point gap up. This is the zone for next week that we have to look for. For today, what I'm going to do is I'm going to look for between 17,200 and 16,923 or 828. So this is the level that I need to take care of today. So this is my zone of action today. Now, today is Friday. Okay, so whenever what I have observed over the past many days, if you are a quant guy, you can go ahead and test using your quant skills. Probably you may find some idea. On any expiry week, we always beat the trend. That means if 1 week is up, on Friday it should be negative. However, last week it proved me wrong. It was not like that. So it is always not like that. It is not necessary that 100% of time that happens. So, but there is a 95% chance. Okay, so you can always depend on that on Fridays. So at least on Fridays, what you can do is come out of that trend. Okay, take a step back. For example, if you have been buyers long all this week, or if you have been proven wrong because of the rising market, you need to take a step back. What I am trying to say is, since last Friday, for example, if the market is up, okay, people would have made money if they were long, people would have lost money if they were short. In both cases, what happens is, today is the day when you need to take a step out of that sentiment and take a look. For example, if you have been flummoxed by shorts, you'll be feeling very bad. Your emotion is very low, you are very negative. So just take a step out. Don't take wrong trades today. Lower your position size on Fridays, because on weekend, large institutions do a lot of book adjustments because they do not take large overnight risks. Even if they take, they are hedged positions. So these kind of adjustments generally keep the market on tenterhooks on Friday. So on Friday, you have to be extra careful. Do not over trade or do not oversize on Fridays, especially. So if you are trading 100 lots, you should be trading only 25 to 50 lots on a Friday, not more than that. Okay. So that's what Friday is about, and we got our range. We need to understand our sentiment. We look at intradays when in a bit when we look at market profile charts. Now let's see what is happening in Bank Nifty. So in Bank Nifty, I see that 37,372 is the closing yesterday. I told you clearly in the channel, and yesterday in my live market demo session, I told that this gap is going to be filled, and we got filled. And kind of now the zone of action is going to be this balancing area. This is a very important area, because before taking a leap down, the market spent some time here. So there is a lot of gold here for future shorts. So probably you need to observe the market action here and then take a move down. That means before shorting from here, you need to see how the market behaves here. So there might be plenty of action here. So there won't be one-way action, obviously. So if there is any, it's going to come late next week, but not today. So probably we may gap up, come down, or move in this range, or break. Anything can happen in the market, and I am ready for that, right? So what are the levels, or what are the zones that I have to look for in Bank Nifty? So in Bank Nifty, I will look at this zone. This is the zone until 38,000 I will look for. So however, if there is a gap up, I'll be very careful to not look for continuation towards 39,000. So just hold your horses and kind of control your expectations. Trade less even in Bank Nifty. Okay, because there are no moving averages around here. You see that we are much above moving averages. Whenever we are much above moving averages, there are no references to work with, and you have to be extra careful. You are in an uncharted territory. When I say uncharted territory, there is no kind of anchor zone here. The only thing we have is the balancing zone here and a kind of swing high. So we need to be careful about this zone for today and next week, right? Okay, now let's see what intraday charts have done yesterday, and then we will kind of proceed to market profile chart. So yesterday the market opened gap up, as everyone knows. However, it took support near the 20-day moving average, and suddenly it was taken up. So whenever the open is taken up, you can't sit short, and we try to move towards other moving averages. And you see how kind of we tucked into other kind of moving averages here, and then we spent a lot of time here. There is a lot of balancing happening here. We look at the market profile chart. So there is a lot of action between 869 and 912, and you see that we broke at 828. So once we broke 828, it has been only an uptrend. So the market was very positive. So today, when the market opens, I will be very, very careful. And if it opens gap up at around if pre-open opens at around 170 or so odd levels, I will see how 17,200 put writers or call writers are doing there. And then there may be a slight weakness. That is what I'm expecting. So I'm always expecting, my research is always conservative. It is never aggressive. However, when the market opens, I change my tune. I do not feel ashamed that my analysis has gone wrong. So I am very angry with the market. So I will trade wrong. I will lose. This is not my attitude. This is just not me. I analyze because I want to get accustomed to the climate. So doing research is not about finding trades. Doing research means you are getting accustomed to the climate. For example, if your eyes are blindfolded, okay, your eyes are blindfolded, you are kept in a room, and you have to fight the unknown demon, whoever that is, that is an animal or that is some other person. So what you need to do first is, do not start fighting. First, get accustomed to that room. Okay, what is the size of the room? What are the tools that I can get hold of on the walls? I need to fight, so what are the tools I have? How much can I run? How much can I walk within that room? So this is the kind of analysis that I do in the market. So when I enter the market today, I will know where I am. But when you do not know, when you do not do any research, you cannot know where you are trading, how you are trading, why you are trading. So your research is not about finding trades. Your research is not about getting trades right at the open. Okay, so don't leave your research, because that helps you get accustomed to the market. You are never blindfolded. That's why my losses are very less. I had only 4 loss days in July. That's a good thing, right? Why? Because my research is robust. Every day I do my research. I'm not blindfolded. I know immediately how to turn a loss into a profit. Okay, so that's how your analysis should be. So today we know what we are doing in Nifty. We will be opening near 200. If pre-open does the same as that of SGX, and then we may come down. If we break 273, then you know what you should do. You should be again bullish. Otherwise, as long as 273 is not broken, you can always look for pullbacks, and those are the trades that I will not leave, right? Because Friday is generally a weekday on a uptrend week. Now let's see what Bank Nifty is doing. In Bank Nifty, we did a very great thing of there was just a minute, guys. There is some problem. I need to fix the chart. Yes, that is fixed. So we opened gap up. Wonderfully, we opened gap up. And then there was a good confident bar. That's why yesterday, right from the open, I have been telling in the live session as well as in channel, until this low is broken, you can sit back and relax and enjoy. Who will give you such conviction? Tell me. Who can tell you right at the open that today the market is not going to fall as long as the low is broken? But the only advantage or disadvantage is where you are entering the trade, whether you are entering here or here or here or here, right? So as time goes, you need to look at your location. If location is near to this low, you can take a trade. Simple. It is, trading is as simple as that. It is not easy, but it is simple. Why it is not easy? Because we get biased. Here we will fear, here we will get confidence. Here we will fear, here we will get confidence. Here we will fear, here we will get confidence. That's it. This is what retail people do. But here you don't have to fear. Why? Because I told you, I gave you the conviction. It is your mistake to not use it. So if I am giving a conviction that the market will not fall, then what you should do, you should enter here or here. If you are entering here, it is not a sin, but your stop loss needs to be very small, because it will not fall below the day low. You should not put your stop loss here. You should put your stop loss here, because your risk should be very minimal. So identify zones or locations. That's why I said location is important. You can look at a couple of videos over the past 3 days. I have mentioned what location is about, and you have to be utterly careful about location, right? Okay, now, so even I made a small trade even here in my scalp. Why? Because I'm very confident the market will come back. It will not creak. So there are days when it will creak. So those are that comes from your conviction, your research, your everything. Okay, so in Bank Nifty, we may see another gap up day, because we are trading above this gap. So remember this area, we are trading above this gap. So we will kind of trade within this zone. So we'll see what the market profile levels are saying today. Now, in market profile, yes, the profile is, kind of, it's not of great shape. sellers have a very good control. And today also sellers are going to have control. If the market is going up, it is not because of buyers, it is because of sellers. Remember that. The market is going down, it is because of buyers. Many people will not agree with this, and they will say this is rubbish. Yes, when sellers are powerful, they command higher prices and the market goes up, and you see that the value area has formed higher. So sellers had very good control yesterday, and today also they might have very good control at around 273 or 250 odd levels. So you need to look for these levels, and here we are trading in a very kind of gray area. So you need to be very careful. You need to look at order flow for the evolving auction and evolving levels that are being generated as the market is dynamic. Okay, so when the market comes down, remember that we need to look for 930 or 930 or 828 levels. These are very, very important for us to take home today before the market opens. Now let's look at Bank Nifty. What the Bank Nifty is saying. Bank Nifty chart should also be similar, but it is more shapely, and you see that here also. Whenever the market goes up, it is sellers who are in control. It is not because of market profile, but that is how markets work. Markets always gap up and go up because sellers are commanding the market. And today we will again look at the gap zone, and there can be many levels around these. So ideally I'll be looking for peak around 37,800, but we need to depend on pre-open how to see whether the market goes up from here or not. So when it is coming down, remember 37,300 is a key level. So while going up, it has been the level. This is the zone where we kind of closer to the gap. So while coming down, this 300 is going to be very, very important. Below that, there can be a decent fall towards lower levels. And also 37,050 is also an important level to take care of. Let's look at weekly market profile charts to see how the weeks are getting shaped up. Yeah, here I was completely proven wrong. I thought expiry will form somewhere like this, but it did not happen. That is absolutely fine, because my idea, it is not necessary that my analysis always gets it right. It can go wrong, and I'm happy with that. So today we are going to complete this profile. So probably I expect the market to kind of complete the profile here after opening gap up, and kind of make more rotations around this level after coming down. Next week probably we can see a down week if because all the data are done. Federal Reserve rate hike is done, US GDP data is done. So we may not have anything to move the market. So August first week can be rather dull. Okay, it might be an option writer's market. Let's see how it unfolds today. That's it for today, guys. Yes, we need to talk about the discipline. That is very, very important. Yesterday I mentioned about the 20-mile concept that was coined by Jim Collins. That is very, very important. You need to understand that discipline only makes money. It is the secret sauce of making money, not just money in trading, even in your job. Only people who are disciplined excel. Otherwise, you have to depend on luck. Luck is kind of irregular. You don't know when it comes, when it goes. So what keeps you going is always the discipline, whether you have luck or whether you don't have luck. I have seen typically people who had discipline have always excelled. At least they are not below water. So people who do not have discipline in life or in trading are always below water. They're always struggling. They're always complaining. They're always bogged down by negativity because there is no discipline. So if you get accustomed to discipline, then things will look positive, and when luck plays out, you will eventually become a great winner, whether it is life or in trading. You can go look at number of examples, people who have excelled or people who have stayed away from risks are only those who are always disciplined. Indiscipline breeds mark in life. Okay, so with that in mind, have a great weekend and have a good day. Please subscribe to my channel, give the link to your friends, please comment, and also please give likes, because if you like, you're not going to lose anything, but I'll get more subscribers. That's how YouTube works. So please understand and like. Okay, have a great day, guys. Bye bye, stay safe.